Hello, everyone. Oh.
I don't know.
Yeah.
Hello, everyone. Welcome to the Berlin Blockchain Week, and welcome to the best event of the whole week, we hope. All about security tokens organized by Neufund and Brickblock.
Yeah. Can we turn on the presentation?
We have the presentation. Just waiting one sec. Some.
Can we put the presentation on a screen? Yeah.
There you go. So yeah.
So here it starts.
As I said, welcome everyone to the Berlin Blockchain Week, and thank you everyone for choosing this event instead of all the events that are happening this week. We really appreciate it, and yeah, let's kick it off.
Yeah. So if you want to tweet something, don't forget about Brickblock Week tag, Berlin Blockchain Week hashtag, and Brickblock and Neufund.org, of course. Yeah, so we team up together just with Brickblock to talk about security tokens and share our knowledge. We also invited amazing guests from investors and legal sites to do Ask Me Anything session. So later we're going to have 3 microphones. Feel free to put your hands up if you would like to ask questions. We're going to have plenty of time for that. And panel discussion will be led by Stefano Bernardi, sitting here, the co-author of Token Economy. We really appreciate that you could join us. But before we're going to start, we'd like to thank you, our sponsors. So Rent24 for hosting event in such an amazing venue, and Blockchain Circle and Berlin Valley for sharing the information about the event.
Hello, everybody. My name is Gonzalo. I'm the head of investor relations at Brickblock. Really excited to be here. There's a lot of familiar faces. There's a lot of new faces. So as Manuel said, there's a lot of events going on tonight, so I really appreciate you guys coming here. I'll tell you right now, this presentation is going to be really focusing on the relationship between real estate and blockchain, and how we at Brickblock, how we're finding what I like to call a marriage between the old and the new. Now, I know I can't see the rest of the people on the other L side, but just a show of hands, and this helps me a lot, and it's going to help the panel a lot understand who our audience is. If you could raise your hand, how many of you are from the real estate sector, like the traditional real estate sector? 1, 2, okay, good. Yeah, well, our co-founder Jacob as well, I guess. Okay, good. How many of you are in the blockchain tech space? Okay. How many of you have invested in crypto, Bitcoin, Ethereum? And how many of you have invested in real estate? Okay, great. So as we just saw right now, this is, I'm also guessing out of these numbers, it's the same on the other side of the L that I can't see anyone. So we'll play with those numbers. But really what I always like to ask that question when I'm in front, whether it is in a real estate event or in a blockchain event, because I always find that there is kind of a medium, around 50-50, 60 to 40% of people that are from the traditional space of finance, real estate, and also from the space of blockchain. So what does this mean? I always see it as a clear sign that both sides need to find a marriage. Right? And that's what blockchain does. That's what the beauty of blockchain. So blockchain, in my opinion, and most of my colleagues' opinion, is blockchain is here to take an old, outdated way of financing, infrastructure, whatever it is, and bringing it to a new light. And that's why we're focusing right now with real estate. Because when we look at every other market out there when it comes to doing fundraising or investing, real estate is the one that has pretty much stayed behind times, while just about every other technology has advanced quickly. So I always like to do 2 case scenarios of the type of conversations I have. One is from a real estate developer, and the other is from a real estate investor. So let's take a real estate developer. I'm a real estate developer. I've been doing it for 20 years. Again, this is hypothetical because I'm 29, so there's no way I could have gotten started when I was 9 years old. But hypothetical. That was a joke, but hypothetical. So let's say I'm looking at a building like this. I want to finance a building such as this one. This is in a beautiful, beautiful up-and-coming area. I have a lot of ambitious goals. And let's say that I need to raise 100 million euros for this. Traditionally speaking, since I've been in the industry for 20 years, I have an extensive portfolio. So I have a reputation. I'll go to a bank, I'll get a loan. I'll get an attractive loan. but a loan is a loan at the end of the day. And then I'll go to my pool of investors. These are investors that I've built relationships with for the last 10, 15, 20 years. And I'll go to them. And then at the end of the day, I need to raise 100 million euros. So it might take me, also depending on what market we're dealing with, but Berlin is a pretty healthy market. It might take me months, a few months, a lot of months, a little over a year, or just well over a year. So what does this mean? Well, that right there, that relationship of me doing funding is going to change and influence the way me and my colleagues work, the way I do my financing, the way I do my marketing, the way my goals are for my company. Let's look at it from an investor point of view. I'm here in Berlin. I like to invest in real estate. I want to invest in real estate outside of Germany, outside of the EU, across waters. So how can I do it? Well, of course, I have middlemen that I can work with, brokers, and things of that nature. It's doable, but it's going to be expensive. It's going to take time, and there is a commitment to it. It means that whenever I make an investment, I have to stick with that investment for 5, 7, 10, 15 years. And if I want to liquidate that investment, it's also going to take me time, and it's going to be pretty hard. I need to find the right individual, the right party that is willing to take that investment. These are the two conversations that I always have with real estate developers. So when we take blockchain technology, we're able to change that entire relationship. Now, how are we going to change that relationship? Well, as most of us know here, given that a lot of us raised our hand when I asked the question about blockchain, is we know that with blockchain, I can do transactions much quicker, transparent, liquidity, it's safer. So if we take all of these aspects into those two case scenarios, what happens? Well, I'll go back to that case of me trying to raise 100 million euros. Instead of me going to the bank, instead of me going to the same pool of investors, even if it's a really healthy pool of investors of 5,000 to 10,000 investors, I now have full access to global investors that I previously could not access. So what does this mean? I can now find investors all over Europe, Latin America, Africa, Asia. As long as the KYC AML process is done, I now have a new relationship of what it means to find outside investors. So this also brings me a new level of liquidity. So now instead of waiting, let's say a little under a year, over a year to raise 100 million euros, I can raise this much, much quicker. And that again changes my entire relationship of what it means to do funding. So it changes my entire goals as a company, and it changes my entire perspective of what it means to raise capital. Same thing as the investor. Again, I'm an investor. I live in Berlin. I want to invest in assets outside of Europe. I now have a new way to have access to assets that I previously couldn't have access to. Maybe I would be able to, but I didn't want to do it because then I look at the transaction costs, how long it takes, the type of market it is, and it wouldn't be a good investment. Well, now I can make that investment within minutes. And I can liquidate that investment just as quickly. And that's what we're building at Brickblock. But the problem is, as I'm sure all of you know, is it's really nice to talk about blockchain technology. It's really nice to talk about this new protocols, platforms. So how can we incorporate that? The way we see it at Brickblock, it's the simpler, the better. We are a turnkey solution for real estate investment on the blockchain. What does this mean? When I'm talking to somebody in the real estate space, I'm not going to judge their knowledge on real estate. I'm not going to judge their knowledge on how good they are at choosing a right property, right portfolio, building the right fund. There's a reason they've been in the real estate industry for 20 years and plus. They know this better than anyone. So I say, look, you don't want to build a new blockchain solution. You don't want to set aside a new office and hire a bunch of engineers, hire a bunch of people to build this. We'll give it to you. We know what you do best. We know what we do best. And this sort of marriage is the marriage that I see the only way to work in this space. Some may disagree, but this is our opinion. So what does this mean? Well, as we are dealing with very traditional individuals, the least that I want to do is show them and present to them something that is extremely complicated, something that they need to do extensive research on. They need to speak with outside sources. We need to keep everything as familiar as possible. I'll take a quick example here. And this is something that we're putting forth at Brickblock. An SPV stands for Special Purpose Vehicle. This is a very traditional real estate setup for assets. It is made up of a limited partner and a managing partner. In this case, I'll be the managing partner. I am the individual that has this asset that wants to set this fund as well. And I control everything. I control in terms of the trustee. I control what happens to the property when I want to sell it and all things like that. And I have my limited partners limited partners can be made up of 1, 2, 3, 10, even more. And these are the individuals that are invested in this project, and these are the individuals that are profiting from how well this asset does in the market or how poorly it does. So that right there, we've realized, is the best formula. If we change that LP, the limited partner structure, and now we introduce this blockchain aspect in which I now have access to all of these investors, I can still retrain myself and my staff to keep this traditional way of doing things. I'm still the MP. This is still my SPV. But I now have 100,000, 150,000 investors, or even more. This is the perfect marriage that we found. Now, the only problem that we have as well within the blockchain space is that not only do we need to deal with individuals that are in traditional real estate sector, but also with regulators and jurisdictions. We also need to work alongside with them. So this is why the more traditional we keep things, the better it is. My colleague, Colin, who will also be part of this panel, has been the front runner in setting up this entire legal infrastructure. So during the QA, you can ask him all sorts of questions. He loves to be pushed, so definitely ask him all the questions. He's smiling right now because he loves to be antagonized. So do ask him all these questions. So what does this mean, though? Well, we've had some failures, we've had some successes. Out of some faces here that I know, most of you are familiarized with this property. This is a Wiesbaden property. Now, this is where we are also learning in terms of how jurisdictions work and the relationship that they have with blockchain technology. In Wiesbaden, this is a property that we are pushing for to have retail investors. Now, there's a huge difference between retail investors and accredited investors, right? This is a project that we've been pushing forth extensively, and we're getting quite close to having the ultimate goal of having retail investors being part of it. But as we realize, there are always ways to present a traditional setup with a blockchain setup. And that's why we have, this will be one of our first properties in which we're only going to have accredited investors. This is a property out of the UK. It's an affordable condominium space, but it is going to be the setup for a lot of our next projects. And that's how we see ourselves, right? We are just a tool. This success that we're going to have with these assets are the same success that we want to give to other real estate companies. And how do you do that? Well, as I said, you need a very, very dedicated group of blockchain engineers, blockchain product managers, and individuals that not only have understanding of how the blockchain space works, but also within the real estate space. We're a team of 20. We're all here in Berlin. Most of my colleagues are here as well. We've done an ICO. We've been pretty successful in an ICO and also had a Series A investment, and also been able to work with great partners such as Finch Capital and Consensus Diligence. So what I'm trying to say is that blockchain technology is pretty incredible. We're all very familiarized with it. We're always reading new tokens. We're always reading new security measures. We're always reading all these things. But the only way for us to really get it to the real estate space is if we bring it back a little bit. We stick with a traditional way of doing things, something very familiar, do some tweaks, that is enough tweaks for us to get to the blockchain space that we want to, and then little by little grow with the space. Now, this is my email. This is my personal email. Please send me any questions you guys have. Follow us on Twitter. Most of my colleagues are here. Jacob over here, he's our co-founder, CEO. He'll be here all night. Manu, you just met. Emin, who is right behind, one of our product managers. Pascal, Chief Intelligence. And also we have Alex, who's all the way in the back. He's our advisor. We're here. There's a lot of questions that people ask us, and we'll be more than happy to answer them. And we're really excited. We have a lot of exciting things that we have lined up. So please follow us, because I can assure you that you'll be very surprised with the things we have to announce within the next couple of weeks. Thank you.
Hey everyone, I'm Alex Millay. I'm the Investor Relations Manager at Neufund, and I'm here to talk to you a little bit about security tokens, what they are, what the market opportunity looks like, what the competitive landscape looks like a little bit, and then talk to you about Neufund, how we fit into it, why we're different, and why you should care. So security tokens, or tokenized securities, are financial securities that comply with the financial regulatory authority under the jurisdiction in which they're issued. Often they tend to represent ownership in an underlying asset, whether that's a share of stock or a bond or a pool of real estate or a fund. And what's cool is that they have the ability to automate most of the processes, if not all, that are today carried out by back office employees at banks, custodians, asset managers, you name it. All of this can be programmed directly into a token. And what I mean by that is shareholder rights, like buyback rights, dividend rights, information rights, etc. All of that can be programmed directly into a token. Oh, good. This doesn't work. So what does the market opportunity look like? I'll give you a hint. It's huge. So depending on who you ask, the market capitalization of security tokens may represent anywhere from $1 trillion to $10 trillion in just the next few years. And I get that that number sounds crazy, if not ridiculous, but you really need to take a step back and think about the context. So let's put it into perspective. So today, the New York Stock Exchange and the NASDAQ together combined to represent $30 trillion worth of publicly traded equity. Global market capitalization, that being every publicly traded stock on exchanges globally, represents $80 trillion. So if we were to tokenize just 1% of those assets based on the fact that they offer the benefits that I've just described, then that would already get us to $800 billion, or close to $1 trillion, surpassing the market capitalization of utility tokens in total at their height at the beginning of this year. If you ask the World Economic Forum, they believe that 10% of global GDP, equivalent to roughly $8 trillion, will undergo tokenization in just the next 10 years. And if you think about real estate, which Gonzalo just talked about, illiquid real estate today represents $136 trillion worth of assets that's just ripe for tokenization. And so while that number, 1 trillion, 10 trillion, may get thrown around and you may be skeptical of it at first, these numbers, when put in context, make sense because securities in general are a massive, massive, massive market that's just ripe to be disrupted through tokenization. So what does the competition look like? There are a number of competitors, new entrants that have begun to emerge this year. In 2018, we've seen companies that have decided to become security token issuers all across the ecosystem. Issuers, exchanges, liquidity providers, hybrid platforms that connect both investors and issuers, tokenized funds, tokenized securities, etc. So Securitize, a US-based security token issuer, is building a DS protocol. They tokenized, they're actually a portfolio company of Spice VC, itself a tokenized fund, and they're tokenized because their portfolio company, Securitize, tokenized the fund. And they are traded on, Spice VC is traded on Open Finance, which is a secondary exchange that actually just launched a couple weeks ago. They have a few tokens trading, Spice VC being one of them, and Blockchain Capital, I think, being the other. Polymath is a big name in this space. They have announced that they're purchasing a stake in the Barbados Stock Exchange. They're a security token issuer. They've announced a pipeline of some STOs that'll take place later this year. Coinbase, many of you, I hope, have all heard of them. They actually went on a buying spree earlier this year and decided to acquire 3 different entities: a registered investment advisor, an alternative trading system, an ATS, and a broker-dealer, in order to both get into this market opportunity of security tokens, as well probably realizing that the market that they're currently in, utility tokens, is waiting for the regulators to swoop in. I mentioned Securitize and Polymath. Harbor is another one of these. They're building a compliance protocol. T0 is a company that is actually a subsidiary of Overstock.com, which is an online e-commerce giant in the US, competes with Amazon, and they've decided to go all in on security tokens. So T0 both is a traditional equity exchange that is converting their ATS, alternative trading system, to list security tokens, and they've also entered into a joint venture with Box Holdings to list and trade security tokens as well. Shares Post, Templum, the list goes on. Every single day there are new entrants coming into the space. And what's cool too is that the incumbents have also woken up or are at least beginning to wake up. So last year, maybe you saw some news around incumbents, whether them being banks or exchanges that were exploring blockchain technology and issuing proof of concepts that you didn't really understand them at all. This year, when you look at the announcements that have come out, particularly in the last several months, most of it is focused directly on security tokens. You have, the big news coming from the London Stock Exchange and 6 Swiss, being that London Stock Exchange is actually developing a token or a platform to tokenize equity. They'll be piloting something actually this month. 6 Swiss, the main Swiss stock exchange, created 6 Digital Exchange to build an entire infrastructure around trading, settlement, and custody. Börse Stuttgart came out at the beginning of this year and said that they were launching a crypto trading app. That's awesome. They also came out recently and then kind of pivoted and said they're launching an ICO platform to, guess, you name it, list and trade security tokens. Deutsche Börse is creating a securities lending solution. They've also highlighted distributed ledger technology as being one of their core pillars of their next of their 10-year strategy. Australian Securities Exchange, Gibraltar Stock Exchange, and not to mention, by the way, Neufund, which has partnered with the Malta Stock Exchange and Binance, the world's largest cryptocurrency exchange, and will be conducting a pilot where we'll be listing and trading security tokens together. So, how does Neufund fit into this? Well, we actually have been around for a lot longer than some of the startups that I mentioned on the first page. Whereas they've gotten in this year, we've been at this for a while, since 2016 actually. And what we are is we're a platform for the primary offerings of tokenized securities. We connect both inventors with inventors in a dual-sided platform that operates on the Ethereum blockchain. What's cool about our security tokens is that in addition to embedding all those shareholder rights that I mentioned at the start, you can also embed utility functions on top of them. In order to issue an STO, it's really simple. If you're a company, you take some or all of your shares, you turn them into tokens, you add some utility functions if you'd like, and you issue them on-chain in either a private or a public placement. We like to think of our security token offerings as being a hybrid investment model that combines the advantages of a traditional VC round, of an IPO, and of an ICO, while removing both the headaches and the regulatory uncertainty that some of those alternative models possess. And what's also cool is that no knowledge of blockchain is required in order to participate. You don't have to be a blockchain-based company in order to issue an STO, and you don't actually have to know a damn thing about blockchain in order to do an STO on our platform. We accept both Euro and Ether, so really, the point of that is to bridge again both the on-chain and the off-chain worlds. So you may have crypto investors who want to deploy their capital off-chain, and they've acquired a good amount of Ether. And you might have traditional investors as well who don't know what Ether is, but want to invest in innovative companies on our platform, and they'll use Euro. Why are we different? I've told you a little bit about what we do. I've told you about the competition, and I've told you about the market opportunity. Why we're different is because transparency, it's a list of these things, and I'll go through them. Transparency is at the center of everything we do. What I mean by that is we're an open source protocol. Anyone can see our GitHub repo and take it and steal from it if they'd like. We hope they don't. Our security tokens are legally binding and regulatory compliant under German jurisdiction, removing this regulatory uncertainty that currently exists in the ICO market today, where investors are essentially investing in what's akin to your bank handing out credit card loyalty reward points. We're not just a protocol like some of our competitors. We have a beautiful, world-class, working platform. We're global. Any company from almost any jurisdiction in the world can tokenize a security with us. And anyone can invest on our platform. Most platforms, the ones that I mentioned in the United States, they only accept accredited investors. Accredited investors are people who are already rich and who want to get richer. We believe that everyone should have the opportunities to invest in the next Uber or the next Lyft. We have multiple robust secondary market partners. I mentioned Binance, I mentioned the Malta Stock Exchange. We also partnered with BitBay to list our equity tokens, and there are more in the works. And lastly, we're thinking big. Equity is where we'll start. We're moving into tokenized funds, into debt, into real estate, you name it. The opportunity is there, and we're thinking about it. So Neufund is decentralized and community-owned. I mentioned that we're community-owned. Let me tell you what that means. So investors own or are economic co-owners of the Neufund platform. So we have a protocol token called Neumark, short, the ticker symbol being Neu. Every time that an investor invests capital on our platform, Neu is issued as a reward for doing so. When I say they're economic co-owners of the platform, I mean that every piece of revenue that comes through the platform, so every STO that's conducted on our platform, there's a fee that's deducted from the issuer. Those fees are distributed 100% to all Neu token holders in a pro rata form. So everybody, whether or not you invest in an ETO, you are taking part in the revenues and the fees that are generated through our platform. We reward early investors as an incentive model with more Neu. So as more capital is invested on the platform, less Neu will be rewarded. It's a typical incentivization model. And if you can choose to hold your Neu and then continue to receive the share of the fees that come through the platform, or you can trade them on any liquid crypto exchange in which we're listed. Lastly, I want to talk about our community, which I think is really cool. Gonzalo touched on this a little bit. We really bridge the on-chain and the off-chain worlds. And what I mean by that is our community is comprised of people from both the traditional financial sector as well as the crypto sector, two disparate groups of people that don't tend to get along. And you have prominent VCs from Freigeist Capital, from KKR, from Project A Ventures, et cetera, that Atlantic Labs as well, that are part of our platform. You have prominent crypto investors. You have entrepreneurs, both in the blockchain space and not in the blockchain space, lawyers. You have developers like Fabian Vogelsteller, who I believe is in the audience today and is the co-author of the ERC20 standard. So I'll leave you at that and want to thank you for your time. You can always reach out to me, alex@neufund.org. Follow us on Twitter, neufund.org. Thank you again. Appreciate it. Looking forward to the panel.
All right, well, thank you to Gonzalo and Alex. And then now we're going to call all the other panelists to join us, please. We are a bit on the late side, so we're going to keep it kind of short, maybe one question each. And then we are going to open it up for questions in the audience. So, Yamila. Yamila is a lawyer with LaCour, a US lawyer, not a German lawyer. She asked me to make this kind of presentation, and a partner at TLDR Capital, which is an advisory firm for ICOs. Then we're going to call Alex from Neufund, who you've just met. We're going to have Colin and Gonzalo as well from Brickblock. And actually, we are one seat short because we also have Mark. No, you come along. So Mark is with Atlantic Labs, which is probably the angel fund in Berlin that has invested in many companies, including Neufund. So we're going to start from the people we didn't have a chance to hear from during their talks. And I specifically wanted to start with Yamila, who has great experience in figuring out how to actually structure all the security token offerings and structures for the platforms. It's actually very complicated to connect the offline world to the online world. And given that she's been working on Neufund's structure, I think it would be great for the audience to learn how that worked.
Thank you. Is this okay? Thank you very much, Stefano, and happy to see everyone here. It's quite a big audience. So from LaCour, we work on the structuring of the Neufund platform and how this idea will be developed and how to connect the offline world with the on-chain world for the SEOs. And basically, Neufund is a German company. Fitforce, the company behind Neufund, is a German company. And when this was being structured and thinking, okay, how do we bring this on board, we had to take into account German regulations and how to actually bring the fact that shares will be tokenized. So a little bit like how the structure, the underlying structure is there is the company, and the company will have their shares, their normal traditional shares, into a shareholders list, usually registered with a particular registry in Germany, the Handelsregister, and they can put these shares on chain with a token, and all the token holders are going to acquire the shares. But in the real life, so in the off-chain world, these shares have to be subscribed by someone. Someone has to own them. So in that particular part is where a nominee structure comes into place, and the one signing the contract off-chain is going to be a nominee company that can either be a nominee company set up by FitForce. FitForce is offering that service, or the particular company can set up their own as well and just bring it into the entire structure. So, and in the other side, you will have all the legal contracts also transform into smart contracts that will be pairing together these two worlds. So you will be certain that in the on-chain world, you have all your smart contracts kind of targeting the share that you are going to own, or the piece of the share that you're going to own, so you can also get the dividends and all the rights back to you through the token. And in the off-chain part, you have the nominee that has subscribed for you. And that nominee won't be able to do anything unless the token holders come together and actually decide that something can be done with those particular shares that are owned by the nominee. So this is the way we structure to come together with these two worlds. Because at the end of the day, of course, you cannot simply say, okay, all the shares are going to be on chain, and that's how it happens, because you have regulators and you have entities in the different states that basically take these registries and handle this register. At least in countries like Germany, there are other countries where you don't have these registries, and then you have examples of states in the US, like Delaware, trying to put their shares into a ledger, into an actual digital ledger. So maybe that's the next step, but so far, at least for the German market, this is the solution that was set up for Neufund.
Very cool, thank you. I think this is a good segue into Colin, who can maybe explain how that is either similar or different for real estate, and why also maybe real estate is such a perfect use case together with company equity.
Yeah, it's actually very, very similar. For our structure, we also are using a nominee as well. We have a world-renowned partner that's supplying that service for us, so we're quite happy about that. And everything that she says is completely true. In fact, it almost begs the question, like, what is a security token, right? Which is the whole point of this panel. And the original question of what is even a token? Like, you don't actually physically get anything. You don't receive any electrons. You don't actually receive anything. You get registered on a registry, blockchain registry. So how is that different from kind of traditional setups? It's actually not that different from traditional setups, which have, like you were mentioning, share registries. It's a concept that goes back at least 40 years in multiple jurisdictions. And from there, you go, okay, why did you have this idea of tokens come about? Sort of a marketing term almost, because it's really difficult to understand that you control or own or have rights to something without putting a name to it. So what's a name to this general concept? A token, right? So that way it represents you have rights. Well, when you talk about securities, you already have those rights represented in whatever offering you get through whatever jurisdiction, prospectus or PPM or whatever you want to call it. So is there really a token at all? It's a really interesting concept when you talk about securities. Now, it's a nice theoretical concept, but how does that play into the reality of when you deal with clients? Well, it's very difficult to talk to somebody who's 60 years old and been doing real estate funding by paper and fax for the last 40 years and getting them to buy into this whole concept. But it's very simple to tell them that you're using a nominee that is just using a different type of technology to record what you're doing. That they get. That is where we bring this into the real estate sector. And that's where we've seen a lot of traction, because it takes an incredibly complex topic and boils it down to something really, really simple, like Gonzalo was telling us all about earlier. And that's the the key that we believe in moving forward with this industry, what a security token is. Once you get that, you can kind of maneuver through everything else. And that's the structure that we believe in at Brickblock, and that's where we're going forward. I know we had a private side conversation about like land registries and direct ownership of real estate, and we examined those roads, and you're a professional investor, you've probably understood that you don't want to have direct ownership of real estate because it comes with all the responsibilities involved in it. You want to have an entity that limits your liability, and that's what an SPV is. And that's why that road is an interesting one to go down, not to mention the fact that different counties have different land registry rules, let alone different countries. So that's why we've chosen this path, and that's where we're going.
Got it. Very cool. So, so here we have companies tokenizing traditional company equities, real estate, and then we have a venture investor. Mark, what are you looking forward to investing in? Do you think you will be investing in a portfolio of security tokens rather than, normal kind of, notary scrutinized equities, or do you maybe think that even your fund will become a tokenized fund in the future? And if not, why not?
Yeah, absolutely. I think it really doesn't matter what instrument we invest to, actually. I think you have to separate the instrument from the underlying, and then for the issuer, which investors you want to approach. These are three different questions. And we see a very early stage, we invest in founders and invest startups, and we'll continue doing that. In terms of instruments, I absolutely believe that security tokens are the future for maybe all kind of investment classes, because they just offer so many advantages versus the old over-the-counter paper-based system. Tradability, or being that you can just link it more easily to an automated execution with smart contracts or automated trading system. So you can do a lot of cool stuff because it's a piece of code that you can't do today. And anybody who's been to the notary in Germany knows it's a pain in the ass and we have to get rid of it. Maybe not straight away, as Emilia says right now, we still have to do the link to the German notary, but over time, as more and more of it gets digitalized, hopefully that puts some pressure on the system, the regulator as well, that we can move towards that sooner rather than later. So that being said, very enthusiastic, and that's where we also invested in Neufund. Strong belief in real estate, maybe even a stronger case. The problem that all token issuance face today still is that they're not standardized, right? So every ICO out there has its own code, its own compliance framework or not. We know there's a lot of scams out there or just badly designed tokens. And that's a problem because every investor would have to do their own due diligence, and every investor just can't do that. So partially they rely on sort of a crowd to give feedback on it. That's fairly imperfect. I strongly believe there needs to be standardization of the tokens itself and of the behavioral compliance standards around that. And that's why we're so excited in platforms such as Neufund or Brickblock, who provide that sort of platform and make tokens much easier and reliable to invest in.
Cool. And on that point of kind of scams and security and trust in the end, I wanted to ask Gonzalo, who's handling investor relations for Brickblock, if he sees those fears in traditional investors, and if you think that this solution can actually maybe also help out in that area, other than obviously all the benefits that we've been discussing.
Yeah, so a lot of for example, the first conversations I have, it's not really with the key decision maker. It's with somebody, let's say, the associate or the analyst or things like that. Because it's really easy for us to go online and see, okay, a hack just happened, somebody stole X amount of millions and never came back with it. So this is a legit fear that a lot of these old school traditional, let's say, real estate investors have, or real estate developers have. So a lot of these conversations in the beginning, they're all about, okay, well, I speak with the associate or the analyst and like, okay, well, why is it that we should have a second conversation with my boss or my superior? And a lot of it too is there's a lot of hand holding, because a lot of these guys are these people in this industry, they look at all the risks and they're very conservative with what they do. And to be honest, this space is still, it's the wild, wild west, right? But at the end of the day, it's important to really have as many conversations as we can with them. There's plenty of times in which, we'll have one meeting, it'll go well, and then 2 days later they say, hey, can we meet again because this new question came up? I just read this article. Can we meet again with now? I want to bring in person A and person B. And we're like, that's totally fine, because this is a space that it's really easy to read the bad news, but it's really hard to read the good news. So it takes a lot of hand-holding. The way I see it that's going to happen is all it takes is a few select players to really be able to make this work, and then it's going to be a domino effect, right? And so a lot of it is everybody that is in this space, in the blockchain space, understands that this is going to be a domino effect, but we need to do show the right due diligence to the other counterparty and let them know that, look, we're not like these other people out there that are getting all the press, all the negative press. So, the more hand-holding we do, the better it's going to be. And at one point, we're going to get at a point in which we don't have to have these hand-holding situations, in which it's going to be, they're going to read successful test cases, and then they're going to be like, okay, let's bring these guys on board, let's do this, let's get it done. But right now, we're in chapter 1 of a really, really lengthy book.
Cool. And I think some chapters of this book are going to be about different type of security tokens kind of interacting with each other, right? And investors being able to hold maybe in the same wallet or in the same platforms many different types of underlying assets, right? So Alex, how do you think that that's going to play out, and what you guys at Neufund are going to do about that?
Yeah, and Mark mentioned this in terms of there being a standard for the protocol of the issuance of security tokens. So this going back to this concept of asset interoperability. Maybe some of you don't know what that means. What it means is essentially with a standardized code like the ERC20 standard, in which our security tokens are compliant with, you can hold an array of assets that represent a suite of different asset classes of different products. So today, if I want to invest in a share of Facebook, I have to go to my online broker, and I have to set up an account, and I can hold public equities in that account. But when I think about all my investments, maybe I have some debt on the side that can't be held in that account. Or maybe I think about investments in terms of real estate, like what Brickblock is working on. None of that can be seen really in the same view. None of it can be held in the same account. And by the way, even this account that you have from an online broker, you don't actually have ownership of those assets. It's held by some complex web of intermediaries on Wall Street, a mix of custodians and clearinghouses, et cetera. And it really is designed to just line the pockets of greedy Wall Street investors and make it even more complicated for the everyday person who just wants to invest, who just wants to get these great opportunities. Makes it even harder for them to understand their financial life. So with a standard like ERC20, in which our security tokens are compliant with, and many, many others, you can hold an array of these assets all in one wallet, and you actually own them. And so one of our key goals at Neufund is to empower this concept of ownership, to honestly go back to the days when this complex web of intermediaries didn't exist, a simpler time, so to speak, and make it actually personal and emotional for the people who are investing in these opportunities. And that's just one of the many benefits that security tokens offer. Mark touched on some of them: 24/7 markets, much more increased liquidity, reduced compliance, fractional ownership. Tokens can be divisible infinitely. So today, if I want to buy a share of Berkshire Hathaway, then I better have $287,000 lying around because one share costs that much. But in a tokenized world, I could own 0.01 tokens, security or equity tokens of Berkshire Hathaway, if I wanted to participate in what that company is doing and yet not break the bank or not have the money to do so.
Awesome. Thank you so much. So we as we said, we're a bit on the late side, so we're going to open it up to questions from the public right now. Does anyone have anything to ask to the guests?
Wait, we're going to have a microphone, so it will be easy. We have one microphone here and one in the backstage. So.
Yeah, we have a microphone also here in backstage.
Yeah, thanks. So one problem of the ERC20 is they are transferable really easily, no? And then you have projects like Polymath or others working on standards like ST20. Also other standards which in Delaware, for example, could be used, which is the A27, the ERC A27. What do you think about these standards, and why do you think that ERC20 is a better solution?
I think, so I've taken a look at Polymath's standard, and really the key differentiator in terms of what that protocol has is it has a verified transfer module. So it's essentially saying that a check needs to be made in order for that token to pass from buyer to seller. And in their case, or in the case of most US-based issuers, the reason for that is this concept of accreditation. If you structure your security token offering as a Reg D compliant security, then you actually can't market to the entire investor base worldwide. You can only go to accredited investors. So they need that. So they need a verified transfer module. There are other ways of attacking that. You can create applications not on the protocol layer, but one layer above, like which we have, a token controller application that actually has the same functionality that is not yet embedded in the code. It's on the application layer, because what we believe, what our CTO Marcin believes, is that a standard should be have as broad means of applicability as possible. So a standard should not simply address security tokens. It should allow developers and creators to do what they want with it based on the idea that it can be adopted, it can have mass adoption. So we believe that designing based on the ERC20 standard, which is widely adopted among the Ethereum community, among developers worldwide, is the better way to go, while we can build those functionalities at an application layer, one layer above.
We also use an ERC20 token exactly for what you were saying. It's well tested. It's been used throughout for over a year at least. Whereas you have these other standards and you just really don't know, as well as it's difficult to get partners. They can research ERC20. It's hard if you change a standard, really hard to get a partner to agree and trust you. So we do the same thing, and we have a whitelist, which our clients are a bit interested, actually, sometimes only allowing the asset to be purchased within their own network. So it allows us to customize exactly who can purchase what, depending on what the client wants. It's also not just the Reg D compliance, it's really AML KYC as well, which needs to be passed. And you have to pass it in order to get onto our whitelist. If they want to go out to the open market, they certainly can. Otherwise, it's not transferable if you don't show up on that whitelist. So it keeps all the bad players out of the system.
We have a question from the back now.
Hi. The source of this voice is invisible and on the other side of the hall. My name is Ganesh, Ganesh Prasad Kumble. I've flown all across from India. I'm mentoring at ETH Berlin, and I saw this event and I jumped in. I have a specific question I want to throw to all the members of the panel. When we are talking about STOs and the future adaptability of the STOs, one of the long-term sustenance question is regarding the risk exposure. Similarly, the secondary markets handle risks in the economy. So what would be the panel's take on bundling these STOs and making sure that the risks are addressed in the long term? And how would that work in a regulatory environment, vice versa with typical ICOs which use ERC20 or any ERC tokens? Thank you.
Thanks. Who wants to take that?
So I think it's important to keep in mind, let's again go back to the traditional way of doing things. If I invest in a particular asset, particularly in real estate, right? I'm doing my own due diligence. I have the financials. I understand what's going on. I feel pretty comfortable with this market. But then the crash of 2008 happened, for example. Now, whose fault was that for that crash? Was it my decisions that I made as an investor, or was it outside factors, right? I think at the end of the day, we have to understand that, for example, in our case, these are, we're dealing with real life assets. So in terms of volatility or risk, at the end of the day, you're making an investment, just as you traditionally are with real estate, right? So you got to take those things into account. So I think, you know, as an investor, it's important also to do your research, right? If you are, you like to take risks in investments, well, there's a reason why an investment is a risky investment. Or if you like to be really safe with the investments, it's the same situation as well. So I think that's really important to keep in mind is, at the end of the day, you are investing in a real life asset, do your research, and that's how investors become good investors. And when you don't do your research, that's how bad investors exist.
And I actually would like to add on that, on another type of risk, which is the security risks, not the securities regulation, but actually the securities. So with all the hacks, the more we go into security tokens that actually represent real life assets, these risks will increase. So also anyone investing into these security tokens or anyone participating in the market has to be aware of protection on securing their own assets, on actually following basic rules to keep those assets protected. And even within the platforms or within the, I don't know to what extent within the protocols, but at least within the platforms, building second, third layers of protection so these assets keep their real owner. We're going to be seeing more and more attacks, so it takes a lot of own research and really being super careful where you put all your keys, where you're holding all your assets, just to protect, because the impact is going to be much higher when you really start feeling that you just lost a piece of real estate that you were owning.
Yeah, on that point, I think that there's also two different types of security tokens. Today we've explored one where we're actually talking about real life things, but there's also a type of security token that can only be maybe online, right? I call them fully digital security tokens. And for those ones, all the risks about, you know, hacks and things like that in custody apply. I do think that we'll see many businesses happen in this space. Right now we're seeing, you know, the first wave of businesses that are actually enabling all of this, but we'll see kind of a wave of other businesses that will handle the custody, the security, maybe the insurance. They will pull the risks together, and they will do basically what banks do today, right? Banks, they do serve a purpose, you know, for however much I and many other people hate them. We mostly hate them because they get money for free and they can print money however much they want, right? But their service of custody and being, you know, sure that the money that I have, you know, it's actually there and I'm not going to fuck it up. It's actually pretty useful. And I do think we're going to see some crypto native businesses that are going to do that as well. We have a question there.
Hi, Nima here. So I have a two-part question for Neufund and Brickblock. So how do you plan to pay the token holders the rental income in the case of Brickblock? And for Neufund, let's say dividends or any kind of, you know, let's say cash revenue that the company wants to distribute to the token holders. And the second one is, can I use the tokens as collateral either in real world or like for Dharma to, you know, get a loan? So what would happen if my token gets locked in a Dharma contract and then I'm getting like rental income? Does it go to the contract? Does it just get burned? Like what happens to that?
Yeah, so right now we use a smart contract to automatically distribute the rental income or the profits from the SPV to the token holders through Ethereum. Now, obviously in the future, we plan to also give the fiat option, but that's dependent on exactly where they are, and it takes time. If we're going to be giving somebody a fiat option in a smaller jurisdiction, New Zealand, like obviously it's going to take some time to bring on board a New Zealand payment option to them.
Small comment. Does it work now? So it means you get the income in, let's say, euro and dollar, and then you use an exchange to convert it manually, not really automatically. You collect it, and then people have to do this same exchange in reverse to like get their own like fiat currency, basically.
Yeah, well, we don't actually do it. The issuer themselves can perform it. That's why it distributes all out. But it's the same thing if you wanted to pay somebody in US dollar and you receive the rent in euro, you still got to go through the conversions. Hopefully in the future, we move on to a direct fiat payment system, but then you run into transfer agents, which is the exact system you have now. And then you end up paying costs for them and paying agents.
Yeah, similarly, self-executing smart contract that automatically distributes proceeds. We incorporate both fiat as well as cryptocurrencies on our platform, so issuers can raise in either Ether, in Euro, or a combination of both, and the funds are then distributed in that same way. So if you invested through with Ether in an issuer, then that issuer will pay out dividends in Ether, similarly in Euro. And then regarding your second question, which I don't think we covered in terms of using collateral, I look to my lawyer to help me with this, but my understanding is based on the fact that the way that we do it, we cryptographically hash on-chain representation of assets to the underlying asset itself to a legally binding contract that you can take to a court in Germany. My understanding would be that you can collateralize those obligations should you wish, as long as a bank is willing to do that, or a lender is willing to do that.
Well, it will also depend on the underlying relationship, whether the company's shares can be actually collateralized or the agreements within that company do not permit you to do that. And considering that one share is going to be represented by thousands of tokens, most likely these companies will try to, limit that. But this is up to the company's discussion.
From the back.
Yes. So first of all, thank you to the panelists. Super interesting discussion and super interesting what you guys are thinking about security tokens. My question is probably mostly directed at Neufund, because I've been looking at the project for quite some time and also at comparables like these stocks and Harbor. So the upside for retail investors is pretty clear, like just this accessibility to investment opportunities that are only accessible to VCs. But I'm wondering, what is your strategy to onboard these early stage companies to go through Neufund to raise capital over going to VC or maybe other traditional crowdfunding models?
Yeah, so first of all, word of mouth is one of our biggest, our strongest strategies, I would say, in the sense that we have thousands of applications already for companies that want to conduct ETOs. What I'd say is if you're an issuer, sometimes the VC route doesn't exist if you aren't based in Palo Alto or New York or Berlin or London or Paris. Let's say you're based in the Midwest of the United States, you might have a great idea. You may have absolutely no network of venture capital investors or any VC that's even in the area or even wants to pay attention to you because of your geography. So there are a number of companies that exist out there that want to raise capital and can't. There are a number of companies that could raise capital through the traditional VC route and do, but also see the benefits that a security token offering provides over that or in lieu of that. And then another way, I mean, we work directly with our equity investors, our VCs actually, who have been kind enough to organize workshops in partnership with us and actually tout the benefits of what we're doing to the companies that they've invested in as well. I mean, you can look at it as a disruption. You can look at it as an evolution. We're working together with our equity shareholders. We're traditionally backed. We didn't raise funds through an ICO. And we work together with them and recognize together that the benefits that these things offer sort of innately.
If I can jump in there, I mean, we are ready to invest on the platform, so we invest in your ICBM and we'll invest in the companies coming on the Neufund platform. And I think it's not mutually exclusive going via Neufund or doing a security token offering and going the VC route. So these are two different issues. It's the superior instrument. Then the decision if you want to crowdfund, so do private placement to a wide group of investors, or you want to have 1-2 strategic value-added investors that work with you very closely. Maybe advantages anyway in the early stages. And I think the beauty of doing investing in a token right from the beginning also for a VC like us is then you can stick with one instrument throughout the whole life cycle of a company. So instead of going to the notary and renegotiating contracts every time until finally you do an IPO, we can start investing even as a sole investor on the platform, using the structure that you're providing, but not going to a wider audience, into a company early on. Then, when the company is ready to go to market, we invite other investors to join us. Maybe later on we do secondary, we sell some of our shares. So that makes it just more easier, through the different stages to have one efficient structure. One question there.
Okay. So I have two questions. And the first question is, so we have the real estate market, and this is very traditional market, and very conservative persons in the real estate, most of them 60 plus, the huge investors. And now we have a new technology, and how do you think, or one of you think, will this technology, I think it's a revolution going all over the world, and how will this technology especially revolutionize the real estate market? That's the first question.
Well, going back to what I was saying is, if we just take, right now we're only utilizing blockchain for investments and funding. To me, and most of us at Brickblock, we see that this is the best way to utilize this technology. It's just really, for example, I'll take an example of when we go to real estate conferences. We only go to real estate conferences because this is where our clients are going to be. Once this market matures, this technology matures, I can go at a stand from a well-known real estate developer. I'll see a really interesting project, like a 3D scale model or whatever it is, and I'll say, I would like to invest a little bit on that. We'll be able to go online, if they have this blockchain application, and then I'll be able to, on the spot, invest in this asset. I can then go to a different stand and then do the same thing as well. Because right now, if I want to invest in these assets, it's going to take a long time. I need to sit down. There's going to be a lot of paperwork and things like to do, such as
Sorry, that's not my question. I know what you're doing. I totally understand your business model. That's not my question. I think there's a technology, a new technology, and how there will raise up many companies who make the traditional business of doing real estate. You just copy doing real estate and you put it on blockchain. Okay, yeah, that's good to do, and you will earn a lot of money with it. But there are a lot of businesses coming out who will revolutionize the real estate market. And for me as an investor, as family office, it's interesting to go into these kind of businesses. And now I ask you, or the whole speakers, how do you think this technology will revolutionize the real estate market?
Yeah. So, I mean, every time we go to these conferences, it's the same story we hear from everybody. Okay. They have problems with liquidity. They have problems with ticket size. They have problems with hold periods. Those are all major problems in the real estate business that's been around for 30 years. A lot of them thought that would be solved with the crowdfunding model, and it wasn't touched by the crowdfunding model, really. As well as the secondary exchange and the crowdfunding model, and nobody trusts them. So that really didn't solve the problem, right? So the problem still exists. We're all aware of this. What we can do now is attempt to solve that problem. And why does this technology solve that problem? That's what we're all here for. Because it allows somebody who, say they had 50 million raised and they had 5 tickets of 10 million, very standard, right? It's from the $100 million property, you get about 50% financing. It's very typical. Okay, so you go to 5 guys and you sell maybe 4 of them, and then I go over to him and he's like, I got 10 million, I want to invest, great. It's like, okay, 10-year hold. I only got 7 years left on my fund, sorry, I can't do it. Oh, I got 13 years left on my fund, can't do it, right? Big problem, it actually comes up a lot. Or you find investors from all over the place and you spend time flying to, I don't know, San Marco or Monaco or whatever, trying to meet these investors to get them signed paperwork because you still need wet signatures for half the jurisdictions on the planet. Yeah, not an easy task. Or you go to a pension fund who goes, I need the ability to get liquidity out quickly. Now, this technology allows those tickets of 10 million to be fractionalized down to almost nothing. Allows it traded almost instantly.
It won't give me an answer, sorry. But I think to answer my own question, I'm sorry, can I speak, please? Okay. For example, in asset management, there will be businesses who will do the Hausverwaltung business. It's a German word, it's asset management in English. Much more easier. Yeah, it will be much more easy to handle thousands of units, for example. And these are kind of businesses we should invest into because, and for you as a fund as well, because there are so many investors out there.
Yeah, you're talking about a different field. That's real estate management. We're talking about real estate finance.
Yeah.
So
but
it's a different
sticks
field.
together. If you don't knew this, you don't know real estate. Anyways, I have another question.
Thank you so much. We're gonna give a chance to other people to ask questions. So we have someone here, but I think there's a queue over there. Is that right? Yeah, there you go.
Hey guys, I'm Stefan. I'm representing Polymath, and I just want to start by saying both of these teams have done great work in the space, both from the technology side and also from the regulatory side of exploring what does it mean to create a security token and moreover actually have it be compliant and push a product out there that is actually usable today. So based off of the learnings that you've had going through this experience, I think everyone has had a bit of a different approach to it. What do you guys think we can do as an industry to work together and promote the benefit of security tokens as an asset class in general and overcome the barriers that we're all seeing?
I think we need a, this is a very young space. It's a big market. So one success story is a success story for everybody, right? So I think that's one of the things is, we all have very different networks. I also speak with other individuals that are tokenizing real estate in the US, and we're all working together, right? And I think right now it's such early stage that, it's a big market. So I always like to say, for example, we don't accept US investors, right? Because of our own reasons. But then I have other parties that are tokenizing real estate in the US and they only focus with US investors. That doesn't mean we can't work together, right? There's a reason we do it our way. There's a reason they do it their way. The real estate sector is so big, and there's plenty out there for us to learn, and really we need more success stories. Just like in real estate, if you go to a real estate convention, there are hundreds and hundreds of real estate companies out there, and it's all real estate, but they're all doing very, very well in their own separate markets. It can be the same exact story with all of us. So it's all about working together and, getting those early success stories coming in.
I will say get some basics together because there's still a lot of discussion of what should be a basic standard. And I'm not talking about the IT, like the token standard, but actually the standard across the total security tokens industry. So agreeing that AML KYC is a good thing for everyone and building some solutions that will provide that across industries so you can transfer them from one business to another. Getting these basics together, that will be a great way to also push for regulatory clearance and for the regulators to get a better understanding of how this is going to work and how the projects that are out there leading the road in security tokens are actually contributing to the development of the whole industry.
Cool. So we got 2 more questions. If we can keep them brief, and then the participants to the panel will stick around. You can assault them and ask them whatever you want later with drinks.
Okay, hello. I'm Christoph, CFO of Bitwala. Proud to be a neighbor of Brickblock. Hi, guys. But my question is more like to the guys from Neufund. What keeps me wondering is we are very modern people here, we are looking forward brightly to the future of security tokens and equity on the blockchain. But the regulators and the lawmakers are like years behind what's happening in this room. And what keeps me wondering is if we put equity on tokens, there are still traditional shareholders around, and the shares belong to someone, they can do shareholder decisions. So also, can they do the shareholder decision that the tokens are worth nothing anymore and the dividends and the participation rights are taken away from the token holders because we cannot have the full shares on the blockchain? So that would be more like a legal question. It would be nice to answer that. You said something about your nominee structure, but is that really a final thing? Is there no legal risk anymore that the old shareholders or the one who has the shares at the end is perhaps taking all of the nice token structure away from the token holders?
I mean, there's no 100% certainty in law, but this is the best solution we can have. So the point is to have contracts that are enforceable both ways, from the company to the nominee, from the nominee to the token holder. The nominee is a representative, or that's the idea at least, of the token holders, and it won't be able to act against the token holders, but on the contrary, is supposed to enforce the rights that have been granted to the token holders. As in any company, however, the majority decisions will probably lead the path into the company, and of course there's minority protections, but that is something that the traditional law will take care of. And this cannot be ruled out just simply because we're changing the technology. The legal structure behind and the law behind is still the same. And until that changes, which I doubt will change in quite some time, then probably this risk exists. But that's the same you will have if you were just simply a minority shareholder in a company. The majority could do something against you unless you have protected certain specific rights, which could also be put into the nominee, these certain particular specific rights. So the fact that the nominee is there, I feel, will not solve the problem, because that problem you're presenting is simply the traditional problem of how companies and majorities run companies. But that gets built into the contracts. So all these rights that you're thinking of don't have to go away because the nominee structure is there. On the contrary, they get secured by the fact that the smart contract will actually tell the nominee, and the nominee cannot act against that. Again, 100% certainty no, but that is the legal structure behind. And if the nominee does something against those instructions, then clearly is violating its own contract.
If it's company specific in terms of squeeze outs, takeover rules, then every single investor has to do their own due diligence on every single company. Very expensive, impossible, right? Normally in LSE or any other exchange, you've got takeover rules, minority protection, squeeze outs, which are
across the companies.
Exactly. So you don't need to do every single due diligence for every company that you invest in, right? How does it work here? Does Neufund have their own rules where it extends to all companies listed there, or every single company has to come up with their own protection rules?
I cannot answer that question.
We allow our issuers to decide the terms of their offering. It's configurable based on a term sheet that they configure on our platform. They can decide those rights, and yeah.
I mean, there will be certain rules and certain guidance, but it has to be determined.
And to answer your question, yes, investors do have to do their own due diligence on these companies, and I believe that if you want to invest in a company, you should expect to do some type of due diligence yourself, whether or not you believe in certain protections that are exchange specific or based on the issuer. You need to understand the company that you're investing in and understand their business model, in addition to the actual terms of the offering itself. So,
but that being said, I totally agree with you. I think, we should get to a point where investors can really focus just on analyzing the underlying, and everything else standardize as much as possible. I think it's right that you don't standardize all the legal contracts right now, but exchanges in the real world, in the offline world, they also have important role in having standardized framework, having reporting framework, and also market making, and all this gives investors confidence and protection. I think Neufund long-term wants to move in that direction as well.
Absolutely, and as the ecosystem evolves and as exchanges continue to integrate this technology, we look to work together with exchanges. We don't view them as competitors, we view them as partners. And in that respect, we would certainly look to somebody who's been in this business for far longer and may have a certain level of expertise that we can learn from as well. I think we're all learning from each other in this space.
Cool. We'll take the last question that was asked a long time ago over here. Sure.
Hi, thank you. I pick up on one word, the beauty of tokens. And the beauty of tokens, I have an entrepreneur and VC background. And to me, ultimately, startups, their equity is precious. It's precious both to the founders and to investors, early investors, VCs. And I see certain synergy there. Nobody likes getting diluted. And tokens are a great way of raising funds without dilution. How do you want to work with it? Let's say Europe is far behind. In the US, Andreessen Horowitz is the one that is really playing into the space. So they do part VC and part token. And it works great for them. And let's not forget that actually I think that one thing that is missing from the whole ICO space is really the VC insight, due diligence, and checking on the startups and what they are doing. There's a lot of, really things that go wrong because there is no proper due diligence carried out. So the question to Neufund is, how are you viewing yourself in that, let's say, VC startup and beauty of the token space?
So maybe just one misunderstanding or different opinion. I don't think there's no dilution for when we talk about security token issuance, because specifically security tokens do represent a sort of share or claim on the. But I agree, maybe there's less dilution if you can put a very high valuation, as you can sometimes now, or utility tokens is different, of course. But on the other point, I think it's totally valid. You still need, especially in frontier tech space that many of these tokens are offering, it's very complicated. You need to dig deep to understand it. You need to work with founders to make sure the company develops from a white paper to a real company. And I think there's a valuable role to play for VCs there, whether they're the only investor or whether they're part of a syndicate. And I do think we see that increasingly as well. There's typically pre-sales. I think that can happen on your platform as well. We said before, where you bring in maybe some institutional investors who do the due diligence work, who work with the founders before you go out to the general public. Yeah. Cool. So we'll close it out here. We're only going to ask to each panelist for one prediction and maybe one wish for the security token space in the coming years. In a few seconds.
I wish regulators were more willing to sit down and talk and show up at these events, because they never come to these events. That would be great.
Prediction, once we have exchanges actually working with security tokens and being a product that can be offered, we will see a lot of money coming into the space, especially from traditional VCs.
My wish would be similar to what Stefan was mentioning earlier from Polymath, which is that all of us are working together. This is a new space for all of us, and we can all learn from one another, from a regulatory angle, from a technology angle, and from an education perspective. I think we all owe it to our users, to our investors, as companies within this nascent space, to educate. It's the most important thing. It's why I think you should begin every presentation with what a security token is if you're talking about security tokens, because most people don't know yet, and it's really important to bridge that divide as we continue on this journey.
One wish and one prediction. So my wish is that not just regulators, but large service providers and banks actually come to these events and start understanding that there's a change and a shift going on, because regulators are slow. Some of the bigger institutions are even slower. And you need to still have some of these around in order to do simple things like bank money. actually get fiat, have an account that people will recognize, have a place where institutional investors can place money, because they're not going to do it if you use an untrustworthy jurisdiction or bank. That's the wish. The prediction, I predict that we will see a lot of accredited investor offerings happen before you see a lot of retail investor offerings. We have spoken to many regulatory boards, and this is something that we keep hearing over and over. They want to see it proven to professionals.
So wish I mentioned before, more standardization, whether that's being pushed through exchanges, through community agreeing on some standards, or through individual projects providing part of the puzzle pieces. And in terms of prediction, I think twofold. I mean, there will be more regulation, and partially that may be a good thing if it's really customized to what tokens are, not just applying the old security regulations. And then unfortunately also, there will be some big failures in cryptocurrencies generally, but also in security tokens, some big projects failing, maybe the market overall correcting at some stage. But I don't see that as a problem. I'm convinced security tokens are here to stay for a long time.
All right. Well, so thanks everyone again for coming. I think that when in 20 years you will operate on all your security tokens online, and you will look back and kind of realize that you were all kind of handling paper certificates that you didn't really know where they were stored, who owned them, and how they operated. You can remember that you were early on into this revolution. So congratulations as well, and thank you, and a please big round of applause for our panel. So thanks again to Neufund and Brickblock for organizing, and I believe that now we have drinks and party.
Yes, so please stay with us. I know there are also more questions to ask. Our panelists are with us, so please stay, have a drink, have a nice evening. Thank you.